All right, lads, I'm going to do my best in this video to help you actually simplify your trading. So, we cover four concepts or principles that have really simplified my trading massively. So, I've been trading for 6 years, and for 4 of those years, I was just overcomplicating everything and just literally going in loops. In the last year and a half, really just cut all the crap, and yeah, uh, it's it's been amazing. So yeah, gonna go through these positions. So a couple of open entries here, and then jump into the four principles. So again, I hate doing this, but just so you know, I'm not chatting shite. You can see multiple funding challenges past May, payouts 3 weeks ago, payout a week ago, etc. So first of all, I'll go through the principles and then we'll jump into the actual positions. So the first principle is consolidations, and we can replace the word consolidation with geometry. So basically, which high and low is price within. This can be horizontal geometry, like a box, or it can be triangular geometry, like flags, etc. Personally, I find the horizontal ones much easier and simpler to view. I was playing around with the triangles a bit, with triangles on EU a few weeks ago. But for years, I've just used the horizontals, and it really helps me to frame my entire viewpoint of the market because the market it's literally just it's consolidating, expanding, as we know, just accumulating and then dispersing. What's the word? Can't remember the word. Anyways, I view my entire market output is what consolidation are we in? And then once I've identified that, I'm looking to expand that. So it's literally just a process of identifying, okay, what's the high and the low? Which side are we going to break out of? So you can see here, as I'm doing my analysis, this is gold. I'm just drawing in constantly the which box are we within. So for instance, we can see we're in this large high and low. This is the overall range. Here's a smaller range. And then I'll talk you through how I actually decipher which direction price is going to expand. So again, here, GU, we can just clearly see this is the horizontal range. And basically, the reason I'm talking about this is what I look for is, first of all, identifying the range. But then the core thing I want to see is I want to see price break out of that range and fail. That to me is the biggest indicator I'm looking for to actually then look for a move. So when price is on the inside, if we haven't broken out yet, I'm not even thinking about trading because that's literally just inside the box. Again, I think Stacey Burke said inside the box is in the matrix. So if we're inside that high and low, my data shows, and it's just obvious because we're still inside the consolidation. They have to do the fake out. They have to do the old 1, 2. They have to show you going one way to then go the other. If price is to go long, it has to look like it's going short. So what I want to see is, first of all, mark the high and low, and then I want to see price break out of that and fail. That then is when I'm interested in looking to take a trade in this market. So that's the first thing, yeah, just highlighting, okay, which box is price in, which high and low. And again, we know the market's fractal, so it's going to be in this range here, but then also creating a smaller range inside here. But yeah, the main thing is we want to know what's the overall range. And again, this will be dependent on which time frame you trade on. So for this particular strategy that I've entered these trades on, or this system, it is a taking the weekly expansion. So looking to see consolidation build up. It might be Monday and Tuesday, it builds up, then expand Wednesday, Thursday, Friday, or it could be a full week building up to then expand it the next week. But it's a higher time frame one. If you're a shorter time frame trader, you want to be looking at, okay, potentially an Asian range. So looking at Asia's range, drawing those lines across, and then waiting for price to fake out one side, fail, and then trade that up. All systems are very similar, like using similar concepts. But just everyone just uses different lingo. So I really want to keep this super general. So no matter what strategy you do use, you can actually apply these principles. So yeah, if you're literally an intraday trader, you can literally just mark up what is the biggest consolidation of volume and then wait for price to break out in the opposite direction, fail, etc. Cool. So the next thing then is the peak formations outside. So, well, two different types of peak formations that I look for. So first of all, as I mentioned, it's the peak formation outside of the range. And again, I use the word peak formation, it's just price breaking out. It's just them inducing volume. So we can see here, price breaks out of the range, fails, pulls back inside. Price breaks out of the range here, fails, pulls back inside. But to me then, once this happens here, once price fails, or sorry, breaks out and then pulls back inside, I'm now looking to trade this market. Whether it's long or short, I don't know yet. What I'm then looking for is, okay, what are the next two peak formations? So it's basically just making the box smaller and smaller. So for instance, this was the larger box. Then we narrowed it down this high and this low. So we have this high and this low. And then we're looking for the peak formations inside the range. So then we can see these peak formations are inside the range. So what price will do, and a really, really useful um, frame that I've found is looking for price to create a high and a low, and then within that, it will trade into those two peak formations. So for instance, here, price creates this high and this low. It's traded into that, and then it trades into that. And then it just keeps getting smaller and smaller. That's price consolidating before it expands. So a prime, the biggest teller the price is about to explode is it coiling, coil volume. So the way that I identify this coil volume is look at the high and the low. Once we have the breakout, I'm looking to the two most recent peak formations. What I found is price will actually trade into both of those. And then from one of those, it will act as the launch pad to have the expansion. So you can get in at the expansion, or you can wait for the expansion to begin, pull back, and then so that's how I actually enter this trade. Okay. But this is the information. This is telling me the price is expanding. They've traded into this high, they've traded into this low, and now there we go. This is the beginning of the expansion. So I never actually hopped onto the charts with this one. So let me talk you through the highs and lows just to give you some more context. So we can look at let's have a look at let's have a look at EU. So if I go back through EU, you can just see that I'm constantly marking out which range are we in and then just taking that expansion. So you can see here for this whole month, I was just marking out the expansion. So here we can see this is where I took a trade, taking the expansion, and then here's ones where I waited for the expansion to happen and I continued it. But literally just identifying the consolidation, trading it up. Identifying the consolidation, trading it up. Identifying the consolidation, trading it up. This one I fucking held on till here and then didn't hold on for the expansion. So this trade here is one of the reasons why I've actually been able to hold the current trades that I'm in. So I'm in multiple swings, been able to hold this for multiple days just from the learning of not wanting to go against my trading plan. Like here, I had my take profit set here. I closed it. I didn't want to stay in the trade for any longer. I wanted to take my money and go. But that's not what this system is. So since then, I've been applying these rules to a shorter time frame setup, which I'm still gathering data on. But yeah, for this, all these trades you're looking at here, they are taken with the same principle. So you can see here, so we have a peak formation outside the range, fails. We have the high, we have the low, price trades into that, coil volume, boom. Here, I was a little bit trigger happy. So we can see I had my high and the low marked. Price hadn't actually broken out of the top. So this was yeah, you can see the price I'm buying in a premium. So price should have been trading into this peak formation for me to take the buy. The reason I took the buy was I had this high and this low marked, and I anticipated that this was going to be the range expansion. Turns out they wanted to come down one more time. But yeah, From this, I've had a 69% win rate on this particular setup over the last 9 months. And I've been over the last 8 months, we're now currently on the 3rd of June. And every single one of those 8 months, I have been profitable with a solid strike rate, just using these super simple concepts. I know it mightn't seem simple now, but it's literally just box theory, like just identifying the high and the low and only trading once price shows you its hand. And it shows you the hand by breaking out and failing. So once we have the range, we have the breakout, we have the peak formations that were peak formations. You can, if it helps, you can call these supply and demand zones. Like for instance, this is the demand zone that broke structure here. This is the demand zone that caused this break of structure, price and trades back into it. This is where you take the trade. This is the demand zone that broke this structure here. Once price trades back into it, take the trade. Again, it's the same. Like we're taking trades. Like if you're a supply and demand trader or a SMC trader, I'll be taking trades in the same areas that you'll be taking trades, but I'm trying to remove the subjectivity out of it. Like, okay, shall I trade it from this uh, demand zone or this demand zone or this demand zone here? I did trade supply and demand concepts for a while, about a year, and I just found it super subjective. So for me, the high and the low, the larger high and low, it's less subjective, and it's for me, it's easier to spot. Um, and then you can see here, so this is the high and the low. So this is the range created, and then you can just do a fib um, expansion. So this isn't a fib retracement. This here is, but this is basically a range expansion. So this is 100%, and this is a 200% expansion of the range. So basically, once we have the range, we've faked out, we've traded into it, and we've began the expansion. What price will do is it'll just do break out, pull back, continue. So just simple, like the most basic trading concepts like breakout, retest, continue up again. Where will it retest? Yes, it will retest the supply zone, but it'll retest the edge of the range of the box. Where will it target? It'll target an expansion. So for me, it's just okay, where's my take profit? It's at the range expansion. Where's my entry? It's at the edge of the range. Just really utilizing the geometry so much. Here, yeah, we can see this big, large range created, and then price break out of the range, pulls back to the roof, you can call it, or the resistance, support even, and then continues up. So if you were taking this trade, continuing this, solid take profit is you can bet, I was going to say bet the house, but you bet the house that this is at least going to one full expansion of this range. For me, that's the safest take profit. It's one full expansion, and you can test it yourself. It's super solid. And then so this is the larger range. So this is the hourly chart. So that this would have been a whole week. And then you can actually see intraday. This little box here is here. So if you were trading this up, you could actually do a 100, 200, 300% expansion. Super solid take profit. So we can hop on to the charts and just look at some ranges. So price, every time it creates a big high and a low, that's basically a consolidation or a range. It will then expand that range. So here we go. This is a super easy to spot range. And you can notice, for me, I identify the ranges by like that seek and destroy behavior, just a big move up followed by a big move down. That to me is what my eye just immediately looks for on the charts. Always just looking to, okay, where can I see the last most recent one of those? Because that to me is the teller. Okay, now we've created a range. Now I can then look for my telltale signs. So breakout, fail, and then look to the inner range peak formations and which one does price trade into. So we can measure this. So measuring the low here, this high here, and then just drag it out. So then if you were trading this range, you could trade this price breakout, pulls. So this actually would have saved me had I, if I can wait for price to pull back to the roof of the range, and then you can take a 100, 200, 300% expansion. Solid, solid, solid take profit. So again here, this is a large range. So we can look at this range here. So this is the smaller range. So we can see a high and a low. We can measure from the low to the high. And oopsie, there we go. So low to the high, so the initial expansion, 100% expansion. So we've now pulled back to the roof of the range at a psychological round number. So this is actually a solid entry point based on this system. Again, I'm already in a bunch of trades, so I'm not going to be getting into any more. But let's see. So I've been swinging USD CAD short for the last since last week. Again, just using the same concepts. So just identifying a range. So we can see here prices in this high and this low. This was actually the range that I utilized. So we can see prices trading inside this range. I'm going to turn this into a box just to make it easier for us to see. There we go. So prices inside this range. Let's drop down. Inside this high and low. So we're looking for price to break out, fail, and now we have after the breakout and the failure, that's when we then have our peak formations that we're looking to use as reference. So we can see that one. This then is our new range. So we're then looking for how price treats these ranges, because price will then trade into these ranges and will have the reaction. So price trades into this range, pushes up, and it actually failed. So as soon as price breaks past this peak formation, all this peak formation, that's telling us where price is likely to then do the expansion. So we've had the breakout, we have our box, we now have our 2 points of reference. So these are our, basically, this is how price treats these, is telling us which way it wants to expand. So once price has the reaction, we're thinking, okay, maybe this could go long, but then as soon as it rolls over, breaks out, that's telling us, okay, this is now going to do an expansion short. So my laptop just went into low power mode. There we go. Okay, so now we then created this range. So this low and this high in this week. So you can map out this range. There we go. And then I'm looking, okay, how does price treat this range? Have the high, have the low, price trades into the low, fails, and now we can then say this is now going to do an expansion short. So this would be a 100. So we've already hit 200% expansion. I'm actually going for a larger range. So this green line down here is a range expansion of the higher time frame range. That's why I've put it at this what looks like a random point. So that is range expansions. Again, just to simplify it, price will create a range and then expand that. So it'll measure it out. Literally think about it as all these concepts are the same thing. This is the geometry, this is the high and the low. It'll then do that. So it creates a high and a low and then it expands that. Equal. So this is like the universal law of polarity. Like it creates the exact opposite. So once it consolidates like that, it'll then expand that. I hope that makes sense. It's a super simple concept. Maybe I'm really overcomplicating it. But again, all these concepts are literally just looking at the high and the low and then expanding it. Looking at the high and the low, expanding it. How do we know which way it's going to expand? We have the failed breakout and then the inside peak formations. Cool. And then the last concept, which is the how we actually frame it all, because we have our high and a low, but how do we actually know where we are in the market? So we can use accumulation, distribution, manipulation. That's the third one. Level one, level two, level three. Um, I like to use day one, day two, day three, but framed from level one, level two, level three. So if you're familiar with Stacey Burke's work, Steve Mauro's work, um, ICT talks about this as well. He uses the term the accumulation, distribution, etc. So for me, this is my ICT's version of the accumulation. It's identifying the box. Um, I haven't been through ICT stuff in years, but I don't know. Is the manipulation? Does he talk about the is would the manipulation be the fake out? I don't know. Anyways, for me, just simplifying it is look for the box, get created, and then look for your entry points or your points that will tell you your decision points, and then take the expansion. How do we then know if the expansion is to continue? That's how I use the day count, or which day I want to enter, I use the day count. So the day count plus psychological round numbers is how I actually refine my entry. So which day are we on? And when I say day count, I mean 3 days of price going in the same direction. So price taking out the previous day's low 3 times. That will signify the end of that cycle. Price will then either do a reset and continue, or it will do a reversal. So if it goes day one short, day two short, day three short, we'll then get a new cycle up. So then we get day one long, day two long, day three long, etc. Of course, it's not great 3 days up, 3 days down. We can get inside bar days, we can get reset days. So speaking on reset days, I've entered this trade anticipating this to be a reset day. So we can see here. So that you'd have a line drawn here, peak formation outside of the range, and then day one short. So we've taken out the previous day's low on the first day. We take out yesterday's low on day two, and then on Thursday we take out Wednesday's low. That's 3 days in the same direction, putting a peak formation outside the range. And now what we're anticipating is for price to then do the opposite. So when I see this false break, I see the range. Once we see pins outside, pull back inside, that to me is okay, game on. Let me now look to see if we can actually, are we going to do a reset and continue down, or are we actually going to do the flip it and then now do 3 days long? So what we got was false break day one. So day one behavior, it's like all in, trapping the volume. Day two, trade both ways. So price will send traders long and short. And then day three, three pushes, one push, two push, one, two, three. So one push, two push, and then a one, two, three to the high. So each day, each level, each stage of the market has its own characteristics. So here we can see it. Level one, all in behavior. So just price doesn't, you don't want to counter trade level one. Level two, trade both ways. So price is generating liquidity, looking like it's going to go short, like it's going to go long, basically getting money in the market, creating a box to then expand. So we can see here, it created this high and a low, and then this was like a 300% expansion of that range. And then level three, one push, one, two, three to the high. So for me, when I'm looking at market, I'm looking at, okay, which high and low are we in, and then which either day or level behavior are we experiencing? Have we had this false break and an all-in behavior? To me, it's like, boom, okay, this market is now going long. As soon as I see that, I think this market's going long. What am I looking to then? I'm looking to my peak formation. So my peak formation here and my peak formation here. And then waiting for price to trade into that. So as price pulled back here on Friday, this is what I executed. Got a really nice entry here. Price pushed up and then finished the week in minus 0.8% drawdown. Price opened up on Monday and I pushed up and actually was up 5.5% yesterday. And then price has pulled back today to the edge of the box. So I added a position. So using these concepts, that's how I conceptualize or how I entered this just super, super, super simply. And I think hear me say simple and think, what the fuck is this guy talking about? But really, I think each of these principles should be a video in themselves because the day count can get into the variations and maybe that actually will just confuse things. But it's basically looking at, okay, false break, day two, day three. So we take out the previous day's low and we take out the previous day's low. Here we have the opportunity now. Are we going to do day one long, day two long, day three long, or are we going to reset and continue down? If we reset, this becomes day two, etc. So I'm going to hop on here and just walk through some day counts. So as soon as I see this behavior here, so we have a low and we put in a peak formation outside of it, boom, that to me is game on. That is day one. That is day one. As soon as I see this behavior. And again, the reason I'm talking about all this is because of the instantaneous, where I can look at the market and instantly see what I'm anticipating or what I can anticipate to see next, or it frames everything for me, and it's been so super beneficial. It literally is what got me profitable. So I'll do my best to actually expand on these concepts, because it really simplifies the whole market for me. Um, I know I'm not doing a great job of simplifying it today, but stick with me. So false break. So we have a peak formation outside of the range, which fails. How do we know it fails? Because it pulls back inside. And then we have all-in behavior. So that's day one. Day two, so we take out yesterday's high, day two, and then day three, one push, one, two, three to the high. And then we can see we put in a peak formation here and failed. So then this to me was day one short. So as soon as we did that, price pulled back to here. I entered, um, gave a decent stop. This could have been for me. I prefer having a higher win rate and less RR. So hence my deep stops. For me, it's how I like to trade. Averaging over the last 8 months, average of 3.8%. So that could be higher if I was to refine it more. And I am gathering data to refine that. But for me now, I'm comfortable extracting money each month, extracting ore, and then yeah, just gathering data. And because we don't need better risk to reward if we want to make more money. We just need to keep increasing the risk that we're putting on that trade. So then just keep acquiring more capital, more funding, etc., increasing it from 1% to 2%, etc. It's much easier to scale up from 1% to 2%, which doubles our income, as it is from refining or extending our take profit by 100% or reducing our stop loss by 100%. Any three of those things will double our income. But for me, it's just much easier just to go from risking 1% to risking 2%, go from trading 50K to trading 100K, etc. So here we've had day one, day two, day three. So this is now day three short. So if I wasn't fundamentally short on the dollar, this would then be marking out, okay, so this is your false break. This is day one. Oopsie daisies. This is day one. What I would then be anticipating is day two. Oopsies. This would be then day two. Let's come behind, never mind. Day two, day three, etc. But because I'm so fundamentally short on the dollar, I'm anticipating this to do false break, day one, reset, day two, day three, etc. Okay, let's go through just a little bit more day counts, then I will wrap this up. So here we have a range. So this is just the most important thing. It's identifying a low and then a false break of that low. Like again, it can seem subjective, but we're literally just looking for, okay, this is clearly a box. This is clearly a consolidation. Marking the lows and then looking for a false break. So as soon as we get that false break, game on. So false break, day one, day two, day three. So from here, price can either then do a day one, day two, day three short, or we can get a reset. Ah, okay, so my bad. So this is what I call day one. We didn't take out the high of the previous day. So this doesn't count as day one. So we actually have day one taking out yesterday's high, day two taking out yesterday's high, day three taking out yesterday's high. And again, it's not picture perfect, so that's why what really helps me just constantly, just for weeks and weeks, just marking out what day I think it is, and then seeing how price reacts. Keeping in mind, taking out the previous day's high, also the behavior. So day one, all in behavior. So a day one will look like it will look like this. All in behavior. Day two will look like this, or level two will look like this, trading both ways, and then level three will look like this. I can't extend my screen, but one push, two push, and then a one, two, three to the high. And then we'll likely get a break of structure, and then this is a full cycle complete. So level one, level two, level three. Day one, day two, day three. So what for me helped massively was just for weeks and weeks, months and months, literally years, just marking out, okay, what day do I think this is, seeing if it's right. Which type of behavior does it have? Okay, why did I think this was day three and it was actually day two? Why did price do a reset here, etc. Um, but yeah, um, that's it, guys. I will go through these in more detail. I realize this was a lot for one video, so let's see how these trade. I'll give an update on how these are rolling. Dollar. Let's just quickly talk you through the dollar so we can see peak formation outside the range. Day one, day two short, day three short. Peak formation outside the range, break of structure. This is day one long. So I'm anticipating this to be a reset. So day one, I'm thinking the price is likely going to take out this liquidity before continuing down on the dollar, which will mean that my GU buy and my gold buy will push up and my USD CAD buy will push down. Cool. Guys, consolidations, peak formations inside that consolidation, expanding that consolidation, and then using the day count to actually figure out where are we in that consolidation. Cool. I love you and leave you. That was a lot.